let's welcome in our guest on the show, Sushant Bhansali, CEO of Ambit Asset Management, with us on the show. Sushant, good having you. Thanks so much for taking the time out. We were talking about Niraj here, of course, good morning. And we were talking about some numbers and how the earnings season has been. To your mind, at Ambit Asset Management, how has Q4 shaped up? We're almost at the end of the earnings season. Has it been as per expectations, or did it miss a trick or two?
Yeah, so far, just a couple of results, I think, pending from across our portfolios. And so far, the results have been satisfactory, I think, in line with our expectations. A few results probably ahead of our expectations and probably a miss in one or two. But overall, satisfactory results from our perspective.
Okay. And from a market-wide perspective, Sushant, do you think the results and the commentary give confidence about FY25 performance on the earnings front, or are there question marks there?
Yeah, so FY20, I think we had a blast, almost 20% earning on Nifty. If you look at after a good FY23, and of course FY22, because of the base effect, was also high teens. So overall, good 3 years of 15% plus growth on Nifty earnings. And we believe that there might be some consolidation up there for FY25. So probably FY25 will have slightly lower than the last 3-year average. And we can see probably less than 15%. There'll be some challenges. The global economy has been a bit challenging last few quarters, and that should have an impact on the economy as well. So far, the GDP growth in the country has been quite a blast for the last few quarters. But gradually, as we are seeing the sales growth getting a bit dampened over the last 2 or 3 quarters, while PAT growth was not that impacted because of inflationary pressures easing out. But FY25, I think we'll have to see how the monsoon plays out and what are the government priorities once the new government is formed to take a better view on things in FY25.
Point well noted. Well, the case for a chat today, if you can just pull that one up briefly before we continue our conversation with Sushant Bhansali, because remember, that is what we'll focus on during the course of the next 10 to 15 minutes that we have the conversation point with him. Remember, we will, ahead of the elections, I think it becomes important to try and assess what is the positioning of the market wide and what could happen post as well. Sushant, I know you guys don't wear the trader's hat, so I'm not asking you to, but I'm just trying to understand, based on your conversations, based on your cash positions versus invested positions as well, do you believe that the street at large has priced in policy continuity, or a stronger verdict could be a surprise which could make an expensive market maybe become even more expensive in the sentiment and momentum?
Yeah, of course, if the results go much beyond what has been talked about, I think currently pricing in is that the current dispensation continues and is a continuity of policies with a decent margin. But yeah, if there is a big blast on the election result day, and we see the real 400 plus sort of majority, there might be some momentum still playing away for next few days or weeks as well, keeping market, I think, where it is and going further beyond, definitely. That can be the case. But most of it, I think, as everybody expecting, is priced in already. We had a great run, I think, last 3 weeks. From the lows of, I think, 9th May was the recent low. From there, market has been just one way ahead. So lots of positivity has already been priced in, I have view.
Okay. So, I mean, Sushant, at these valuations, would you be skeptical even if the result is of a strong policy continuity, or do you believe that keeps the market at elevated levels? There is also this whole chatter, right, around what could happen to rates going ahead. EU yesterday said 2 rate cuts coming up from June for consecutive months. Do you think that drives flows towards emerging markets and India, and could that keep valuations elevated?
Yeah, definitely. If interest rates starts coming down, then we will have certainly good flows from global investors, and that should definitely add fuel to the fire which is currently going on in the markets, definitely, because it's mostly domestic liquidity which has driven the markets for the last many quarters. And if we get good support from global liquidity, then definitely another 10 or 15% from here on, especially on the large cap side, looks quite doable.
Doable. Okay. Within that landscape, Sushant, I would love to understand how you guys think about financials now. Because one, there is an RBI large dividend, which will plus the JP Morgan bond inclusion, which might presumably help PSU banks. And two, almost everybody who is bullish on private banks speaks about why the valuation argument works in favor of private banks, even if the naysayers say that the credit growth might not be as strong. So I would love to understand, where are you on the banking argument?
Yeah, definitely, it's a value buy. If you ask any investor in today's context, where the valuations are looking very reasonable, where the earnings growth is good, there are a few sectors where probably, let's say sectors like IT, where the earning momentum has been a bit dampened. That's where the valuations are reasonable as well. But banks offer a great opportunity where the fundamentals, the earnings, everything is in order. Only the valuations, especially on the private sector banks, has been at almost, I would say, a decadal low in terms of valuation. So it offers a great opportunity for investors with long-term mindset on quality franchises to make money still at these levels of Nifty and Sensex for the next 1 and 2 years perspective.
Okay, so that's as far as financials go. Sushant, when I asked you about earnings, I was wanting to talk about a few pockets with you. When I asked you about earnings, we were talking about a chemical company. Just trying to think of a pocket which has been in hibernation now for the last 3 years. There is some smart money which now tells me that the pain might be coming to an end at some point of time. In the next 2 or 3 quarters, we'll see pricing uptakes, maybe volume growth, and that might just yield some strong earnings momentum on a low base as well. Are you guys invested in chemicals stroke specialty chemicals stroke agrochemicals as a space? Why or why not?
Yeah, no. So we have been investing in chemical sector and especially chemicals in particular for quite a long period of time. Since 2016, we have been investing in that sector and made tons of money for our investors between 2017 and 2022. Of course, last 2 or 3 years have been challenging, but someday probably tides will turn. In fact, companies which are delivering good returns are also earnings are not getting, I would say, rewarded by investors. There are companies who have delivered 25-30% earning growth for the last few quarters, every quarter, but they're still trading at the same prices as they were 2 and 3 years back. So definitely the sector has been sort of out of flavor for investors. And when the sector is discarded, even the good ones get neglected. And we hope that a few of these companies who have been doing better than others, as soon as the sector momentum comes back, they will be rewarded much more by the investor community. And we are definitely very positive. Only thing I would say that this bottoming out of the numbers, and especially I think a large part of it is dependent on how the Chinese companies behave in this sector, because they are the price setters in the global context. And all said and done, especially in commodity everything, the margins are, I would say, a slave of how the price movement globally of basic commodity prices move. And from that context, it's like similar to, I would say, that interest rate cut which we have all been eagerly awaiting for last many quarters, that next 1 or 2 quarters we will see the rate cuts starting, and it's always 1 or 2 quarters. So similarly, I think chemicals is going through similar sort of conundrum, and we believe that and we hope that it has bottomed out, and probably 1 or 2 quarters ahead we will see good earning growth. But there are good companies who, I would say, that have been delivering good numbers, and there are few, especially in this quarter, where I would say that the margins have slightly inched up, and that might be, I hope it's not a one time, and we'll see them only improvising on the margins going forward.
Fair call. Afraid I think I'm told we are out of time completely. Sushant, we'll have to call it a day today. But I look forward, post the election verdict is out, Sushant, to talk about one of your reports that you guys come out with on a monthly basis and try and dissect that in detail. But thank you so much for joining in today, at least, and giving us your thoughts. That's the view from Ambit Asset Management. Call it today on this leg of the talking point. Thanks so much for tuning in.